Hi, my name is Drew Moore with Advanced Trading. As we celebrate our 40th year in business, our tactics and strategy have held true through the most turbulent market environments. Our disciplined and transparent approach to managing risk has allowed our producers to take advantage of the near historic prices that we're seeing today. As we navigate the upcoming volatility, we would like to be your trusted partner. Contact one of our local branch offices to speak with an advisor today. You never stop working, and neither do we. Good morning. My name is Drew Moore, and we have just received the September stocks report. Some fireworks here with corn up 13 cents, soybeans down 30 cents, and wheat versus the December contract month up 27 cents. So a little bit of something for everybody here today. The first question, we'll reach out to Brian Basting, our research analyst here at ATI. Brian, let's talk about corn. The average estimate for the SEP1 stocks report was 1.512 billion bushels. What did the USDA have in store for us?
A bit of a shocker here today, Drew, in terms of corn. It's really two-pronged. The first is USDA made a downward adjustment in the final crop size for 2021 by about 41 million bushels. But an even bigger shocker than that, Drew, was a sharp drop in the wheat crop. And why wheat influences corn. The wheat crop is about 135 million bushels less than what it was in August, the last time the USDA updated things. What that resulted in, Drew, was very little wheat feeding this summer. Implied wheat feeding was only about 100 million bushels. Last year at this time, Drew, it was 250. The result was corn feeding this summer was well above expectations. So we're looking at a corn carryout now for the just completed crop year, about 150 million bushels plus or minus less than what the trade was expecting. Some of the trade were maybe 140 to 150 million bushel less than what the trade was expecting. So tighter carry-in supplies as we begin this 23 crop year, Drew. I think that places an increased emphasis now on these 2022 yields for corn.
Sure, makes sense. Michael, talk to us about the cash markets and what you're seeing, as you see the numbers here from the stocks report and as we ramp up into corn and soybean harvest across the Midwest.
Yeah, it's a pretty interesting dynamic. I mean, we always have the transition from old crop to new crop this time of year. I think this year's interesting in a couple different ways, one of which being we have a somewhat late or delayed harvest in several parts of the U.S., which has forced some of the demand corridors to lean on those old crop bushels a little longer than expected. And now that you see the stocks data come out, some of the reason that we probably saw those late summer corn basis premiums hanging in there helps justify the reality now that there just wasn't as many bushels and there wasn't as much availability as maybe the market, at least on paper, thought there was going to be. So we are seeing basis begin to gravitate down towards new crop levels as harvest really gets rolling, and we have a pretty open window across a lot of the Midwest for the next 7 to 10 days at least. There will be a lot of harvest activity. We'll probably see a little more basis depression. The other thing that's kind of a critical component here too is what barge freight levels are doing. We're seeing nearby barge freight scream higher, particularly for October. Those premiums are going to likely increase and drag up November and forward. So there's a pretty healthy inverse in that barge freight market that could back up some of the inventory on freshly harvested bushels from a timing standpoint into the interior, maybe creating a little bit more of a basis depression in the export channels. Now, what that probably does too is we see heavier variances in the rail and the truck and the barge markets as we work through harvest. So more basis dynamics coming at us, particularly as we watch those low water levels impact freight here.
Makes sense. Thank you for that. Brian, can you give us a little bit more granularity on the wheat situations? There's obviously a lot of four classes of wheat to digest, and from production and stock standpoint, what was your takeaway there today?
a real shocker, particularly on the winter wheat, Drew, because as we took the survey, most of the winter wheat harvest for the August report, I'll back up, took the survey for the August report, most of the harvest was completed, Drew. That's what makes the shock of what the reductions were. I see that the USDA reduced the hard red winter crop by about 45 million bushels from what it was in August, and they reduced the soft red winter crop by about 35 million bushel. So you're looking at 80 million bushel less in the winter wheat production than what we thought in early August. So that was a big shock. I think as you look at what the market's doing in response to that today, as you look at the classes, we did see a reduction, Drew, also in spring wheat, not to the percentage magnitude that we saw in hard red winter or soft red winter. Therefore, if you're looking at intra-market spreads, perhaps, Drew, I would look for HRW to be stronger in relation to in relation to Minneapolis.
Sure.
So in both those contracts, both HRW and SRW stronger in relation to Minneapolis. But it's a shocker. It tells us that we didn't have as much supply as we thought, and the market's responding accordingly. Also, Drew, what this does is place tremendous emphasis now on Southern Hemisphere production, and it's quite dry in Argentina, Drew. They are experiencing a drought. These next 30 days will be critically important for that Argentina crop. If they do not get rainfall, those crop numbers are going to decline, and we're going to see a possibility of an export window. The big wild card, of course, in wheat, Drew, will remain what happens with the export corridor. The export corridor, I believe, will close in about 50 days. That's going to be critical to see if that's renewed or not. But more volatility on wheat moving forward. A big surprise with a smaller than expected crop.
Makes sense. Thank you, Brian. Thank you. Michael, our in-house research implies the 22-23 corn and soybean stocks to use at 10.1 and 5.4 respectively. How significant of an impact on these stocks numbers that we've just received? How does that play out on our balance sheet moving forward?
Sure, yeah, and we're still working through the numbers a little bit as we kind of get our models together, but big picture, what this is likely going to do is it's going to tighten up carryout estimates for corn, and it's almost certainly going to loosen up or make the bean estimates for carryouts and ending stocks go up a little bit, or another way to say it is they're slightly more comfortable. One of the big things that stood out to us was the feed and residual number. Came in 120 to 130 million higher than I think what the trade was looking for. As Brian referenced on wheat, that could be akin to a little less wheat feeding here this summer, but that certainly was a surprise. Either way you dice it up, though, I mean, I think on the initial snapshot models, we're probably taking corn production at least down another 40 million on the in, and on the bean side of things, probably another 25 to 30 million higher. Again, I think that the big thing that we're going to have to just reconcile with is we were already penciling in a fairly tight corn carryout here. This is certainly going to be more impactful for corn as we kind of work the balance sheets, but this just helps kind of bolster the idea that some in the trade are thinking that this carryout needs to be something closer to a billion bushels, and that's incredibly tight. There's going to be a lot of demand implications that we're really going to have to watch going forward. Illinois yields do seem to be outperforming expectations in the early going. Supply is going to be hypercritical, though, as we kind of watch these carryout estimates tighten up.
Thank you. Thank you. Speaking of Illinois yields, Brian, you've probably come through hundreds, if not thousands, of yield reports on corn and soybeans over the last few weeks. How far off is the USDA, in your opinion, on corn and soy yields, and give us a little glimpse into weather here for the next few weeks for the Midwest?
I'll start out with weather, Drew, and Michael highlighted it earlier. It does look like a very favorable weather scenario setting up for the first 10 days of October. A bit variable on the temperatures, but not a lot of rainfall. So as long as this crop is dried down to a preferred level for a producer to get out there, I think we're going to see a very active harvest for these next 10 days. On the yield side, Drew, I think Michael did a terrific job highlighting that the early yields, underscore early yields, particularly here in the state of Illinois, perhaps have surprised some people to the upside. I do want to caution folks, though, that we realize that particularly out west, there are some poor crops that suffered under drought this year. We'll see what the USDA tells us on October 12th will be the next report. The challenge with that October 12th report, Drew, is they are conducting that survey as we speak and into the first couple days of October. So I'm not sure we're going to know a lot more in terms of actual results on that October 12th report. I think, Drew, the story is going to be told between October 12th and November 9th. That's the final fall report the USDA publishes. With good weather, we're going to see a tremendous volume of harvest take place in that 4-week window, and we will know then by November 9th what the USDA number is. But today, I just think it's too early, Drew. I think Michael hit the nail on the head, though. This market, particularly the corn market, is going to be hypersensitive to what these yields are, given this lower than expected carry out we saw from last year's crop. I think it's going to be an environment of volatility. Just a side note, Drew, I really think it's a tremendous opportunity for producers out there to execute some risk management strategies and really get floors underneath this crop, get control of their 22 bushels. And Drew, a final note, it's not too early to think about 2023 either for corn or beans. So that's something I'd strongly consider for the viewers to think about.
Absolutely. Absolutely. Thank you, Brian. Michael, last question for you, more macroeconomic, macro related. The S&P yesterday closed at its low for the year, and we're headed into Q4. Come Monday, inflation's still somewhat rampant at this point. Interest rates are on the rise to curtail some of that. How does all of this impact commodity prices, specifically ags, over the last quarter of the year here?
Yeah, it's a good question. I mean, the rate hikes have gotten to the point where they're unprecedented, and we're seeing just a lot of macroeconomic pressure, not just in the States, but globally. And I think that's one of the biggest concerns now is, if we do gravitate towards a global recession, what is the ultimate impact of that going to be? There's going to be concerns that we see slowdowns in some of the major global economies. Prices of raw materials continue to run, and even stateside here, I mean, we're feeling the impact, right? Like, U.S. dollars just hit 20-year highs earlier this week. Mortgage rates this week are highest since 2007. So nobody's insulated from it. But if we do start kind of gravitating towards a global recession, more likely than not, there's going to be cash from some of the large funds and players in those type of markets sidelined. There could be diminishing returns for those looking at bullish energy, bullish kind of macro commodities and raw materials if building slows down. So it spider webs out, but any talk of this, and it feels like we are in it, does tend to pressure prices kind of from the outside across the entire span of commodities, ag and others. So it's a little bit of a pessimistic outlook here as we kind of work through Q4.
Makes sense. I think you're in line with most others in that regard. So thank you both today. It's been a pleasure, and we'll look forward to seeing you both back on October 12th for the October USDA report. Have a great day.